GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So the big event at the tail end of last week was non-farm payrolls. It was a big disappointing headline number and the dollar initially fell, but it gained steam again afterwards, and we saw a big reversal down in gold and silver. Because the assumption in the market was that the Fed are probably going to still taper either in November or possibly December, but most likely this year. So really that dollar strength argument, because the Fed are winding in the stimulus, is still intact. So still a kind of generally dollar positive fundamental outlook as far as the Fed goes, but obviously we're going to analyze the charts today, and actually we're at some pretty major support levels. I'll point out shortly in especially the British pound, which would actually suggest some strength in the pound moving forward, maybe dollar weakness. I'll discuss that more in just a moment. It was a good week and a good weekend for Bitcoin. I'll cover that towards the end, and oil prices continued to surge. We're up above $80 a barrel in WTI again at the time of recording. So all pretty interesting stuff going on. We're in the busy month of October. This is the first week of earnings season, Q3 earnings this week. So that pretends to add a little bit of volatility potentially as well. Any questions or any comments, please drop them in the video. Please drop us a comment. We welcome that. Otherwise, click that like button if you enjoy these videos and you're a regular viewer. Let's have a look at the euro-dollar pair to start with. Just wanted to wind out for a second to have a look at this weekly candlesticks chart. I remind ourselves of this is the head and shoulders pattern with the upward sloping neckline that we pointed out before. This is the height of the pattern. Is that covering? Oh, yes, it is covering a candlestick. So, and then we're projecting that down from where the candlestick broke the second time. And so that gives us a downside target in terms of the pattern of, you could say, 111, pretty neatly. But there's some pretty substantial former resistance from, you can see these peaks through middle of 2019, early 2020, mid 2020, with some pretty major resistance around 114. So as we come back down here and where we sit at the moment, around 115 and change, potentially 114 could be the low, and maybe we don't even make this head and shoulders downside target objective due to that major that major resistance in there. So even from a short-term trading perspective, if you do see some bounces in this area, they are significant from a long-term perspective. So you'll have the long-term players potentially joining you if you're a short-term trader trying to buy around those levels around 114. So that'll be something to look at if indeed we get down there. Obviously that's far from guaranteed, but that is the general direction at the moment. If we scale down to the daily chart, you can see we've broken through this longer term support at 117, and we've been tumbling lower. And if we go down to our 4-hour chart, our kind of trading time frame, if you like, you can see that we tumbled through there. We had a bit of a bounce, but we didn't even get back to that supply zone. We dropped down more recently. It wasn't a very determined break through the previous low. We only just nudged below it, and then the following candlestick we saw some buying come in, went a bit sideways, and now we've kind of popped up a bit. So some euro strength coming back into the market after a period of weakness. So what we could see is something like here, a repeat of here almost, is where we made a low, kind of bounced up very shallow, made a big sell-off down, but didn't really make any progress, and made it back through that low again. Maybe we just come up and challenge the highs and we go through a sort of sideways phase. If that's the case, potentially 116 is enough, since that preceded a little bit of this last little sell-off. Otherwise, we just come and test the top of the what could become a trading range, and come and test those highs, which is about 116.40. So the fact that we didn't really sell off again from it was support, it turned to resistance, didn't really sell off and then broke back above, and now it's holding a support, would just indicate that actually there's not quite there isn't quite the selling power in the market at the moment in the euro, and maybe we can drift up towards the top of the range and trade a bit sideways after what has been a pretty weak period for the euro. So not really calling a bottom, but we're just saying that actually some period of sideways trading maybe stands to reason. All right, and this I wanted to start again on the weekly candlestick chart from sterling, and I think this is even more interesting than the euro because sterling has been one of the big beneficiaries of the dollar weakness brought on by the Fed policy since the pandemic, and you can see that was the low in March last year, or February, March last year, and we've rallied up strongly. Then we double topped. And then we've come back down, and we already have tested this major resistance turned potentially support here. Pretty much what's it, 134 I think is pretty much the number we're looking at here. 134 is actually a pretty major support in the British pound. So how do we think about that? Well, in the very short term, there's been a bounce off 134 already. To some extent, you've missed that boat. Although if you get moves back down towards it again, they are second opportunities to buy near 134. And then again, if your strategy is more of a breakout, and you see on the shorter time frames, which we'll look at in just a minute, if the price starts breaking higher and it's just challenged that major resistance at 134, when you have a bit more confidence that your break higher trade could work. On the flip side, if we do start trading below 134, I think this whole scenario of breakout, retest, rebound to new highs, that starts getting seriously challenged. And what you'd start to think about is maybe it's just, this was our double top, right? But if we stretch it across, then we start to think that maybe what is the bigger picture here is actually the two lows through here, the two highs through here, and actually we're just in a giant trading range. So if we break through 134, there's kind of, nothing to suggest that we can't just go all the way down to 115 again and just be in a sideways range. So we do really want 134 holding would be the long-term kind of bullish scenario that we're looking for in sterling. If we go down to our daily chart, we can see in a bit more detail what we're looking at here. We already had a decent run up off this level, and obviously we can start to see why now, having looked at that weekly chart. And then this is our 4-hour chart, which is a bit more regular for weekly updates, as I often mention. And we're coming into this zone that we'd highlighted. Let me zoom in a bit better. Last week, where we saw that big hefty sell-off into the 134 support. We didn't quite make it by about 10 pips, and then we've rallied nicely off it, and we've pretty much come back, and we've almost retraced that entire move that took place. This was the first support. We've got some early selling coming in here. Then we had a challenge of those lows here. Hasn't gone much lower, and now we're pushing up. So really, the top of this zone and around 137 is really the kind of final opportunity to, in my opinion, to kind of for sellers who kicked off this big down move to kind of add to their position and sell down some more. If the price moves up through this supply area, then I think we really don't want to be looking at the trades that are short the market anymore. This weakness has been absorbed, and actually the price action is more along the lines of we've broken out to the top side, and so the momentum is definitely picking up. Momentum is increasingly to the top side. We've broken out above this resistance. We've moved above the 50% retracement, but we've still got the 61.8. We've still got 137 above us. So they are opportunities to sell down with good risk reward. Say if we do sell off down towards the lows, perhaps down to this demand area, which is about 134.50. Obviously, that's that would be a tasty trade were it to come off. But above this area, as I say, above the 61.8 Fibo, then I think we start looking at this bigger picture, and we think, well, actually 134 seems to have worked, and we're breaking above these short-term areas of resistance, as I say, the market's starting to turn a bit positive again. Right, I think I've laboured that point enough. Probably the most interesting chart at the moment is this dollar-yen chart. We've just hit a 33-month high as of Monday, and you can see that level coming through here. It's been in place for a while now. We haven't closed the week above this level, so potentially a false breakout in dollar-yen, but that's not really how the chart is setting up. We had a big change of momentum, a big rally up to over bought territory. Now we've been settling down into a sideways range with the momentum slowing down, but now the momentum's picked up and we're in overbought territory again, showing that we're in a strong market as we break out to the top side. So this market looks strong to me. The trend is higher, and there will be people tempted to sell into this resistance, but to me it looked like people the selling has already been kind of absorbed in this period here, and now we're fresh buyers are coming in to push the price up again, and then we face a pretty major resistance not far above about 114.50. So if we've just broken 112, basically we've got about 250 pips until another pretty significant resistance up above. And up above 114, then you've really got to say, well, we're outside of this trading range that we've been in. But for now, we're still in it. The Forex market has basically been completely flat as far as dollar-yen goes for almost 4 years. All right. So anyway, just jumping down to the 4-hour chart, you can see this was actually pretty nice, and we mentioned this last week already, that we think this is probably what's going on, is that we had the big surge to the top side, the big nice pullback, and then the pullback to the resistance, which was confirmed, and then it looked like we're going to head off and make new highs, and that's pretty much what's going on. Right, let's move over to precious metals. Can I also look at the weekly chart here? This is our sort of triangle pattern that we're dealing with still in gold, obviously with that flash crash low not having been challenged as of yet. Last week was sort of interesting. Saw some early strength on Friday, but that was completely evaporated. So on the face of it, this is a very soft candle. I mean, this is our supply area here, right? Which I'll show you on the 4-hour chart in just a second. But we completely reversed from there. So price rallied up and just got sold off big time at the old high and pushed right back down basically to the open, just about on these time frames at least, just about closed positively. So that candlestick is worrisome for gold, and you'll notice that it's pretty much kept us below the 20-day moving average. So we tried to break out above the 20-day moving average. We tried to, but we tried to break out through this peak, and we just ran into supply and just sold off right down. So now if we come down to our 4-hour chart, you can see this is a situation. We actually had this declining trend line, which we initially thought was a positive sign, right? Having the initial break of the trend line is not always the greatest entry point in terms of, oftentimes for a break above a downsloping trend line, you'll often get the price drifting lower after that initial break. But still, that's kind of the signal to you that the trend is shifting. And we came low and we re-challenged the low, and that wasn't necessarily a problem. And then we broke up through the 20-day moving average, which was kind of the second confirmation. So things were all looking pretty good and bullish at this point, having broken the high, having broken the 20 DMA, having broken the downsloping trend line, 3 confirmations of the market turning bullish, and then it just reversed from the supply area. So I think when you see a bearish reversal after such a strong market, that's a bad sign. So the last line in the sand, I think, is gold is around 1750. That's what we've been holding as support. I think if we break through this 1750 support, then then it's not looking good for gold. And I think that at that point, that's when we might start. Firstly, we'll challenge these lows at 1720. I would have thought after a break of that support, but potentially even the flash crash lows thereafter. Moving on to silver, telling a similar story here. This is the daily candlestick chart, and this was also Friday's action. Push up to the same. If they were sitting next to each other, they'd basically be tweezer tops, right? Long tail, trying to break through 23, sold off, made fresh lows, rallied up, tried to break through 23, sold off again. It's not looking good in silver. This was basically our support. It's held once, held twice as resistance. It sort of looks like we're going to roll over again and make fresh lows. If we do get through 123, that'll be a positive sign. We've also got resistance a bit above here from these lows, which we'd signaled before. We've also got this declining trend line, and we've also got this supply area up here where the price start to really sell off. So what are we seeing here? We're seeing a lot of resistance right in front of us in silver, and that's not typically something you want to try and buy into. You would think that some of this resistance, if not the current one, is going to hold. But WTI, not a lot to say about this other than the fact that yes, $80 a barrel, hit that big round number, sold off momentarily, sold off for what hit that, came just short of 80, sold off again the next day, but on that same day rallied back, and this was obviously a very bullish candlestick. There was the resistance, turned into support, false break through the support, closed higher. I mean, after this candlestick, yeah, this is bullish. So this is one of those situations where yes, we're at the highs, but we've made an attempt to break back down through that resistance, and it didn't come off, and that signals that the market's ready to make higher prices. Moving on to the S&P 500, let's just have a quick look at the daily chart here. We just about made fresh lows, but only on an intraday basis. We've not closed through them yet. So this is really the big one to watch through here. Do we actually make a lower close through 4,300? That's really the big question. If we do, then I think we get a much deeper sell-off. We're below the 20-day moving average, the 50-day moving average. I believe that's the 50. Yeah, we're below the 50-day moving average, drifting back from it. On the shorter term basis, you can see we've got these two peaks. Tried to rally back from it, but now as we speak, we're drifting back down towards it again. So I think this is our first warning sign. The market's looking soft. Is a breakthrough 43.70, and then we've got the low down here at 4,300. So this is your early chance to get in on a potential break of 4,300, and then there's 4,300 itself, where again these are the intraday closes, but if we get that daily close below, you may not even want to wait for that daily close below, because it could be a lot lower. Last but not least, here's Bitcoin. I would just, basically broken higher. You can see that 52,000 has been broken. Pretty nice technical resistance turning into support after a couple of days drop. Price rallying up above 56,000 at the time we speak, and then really the big one is 60,000. That is the one to look for. Okay, I'm going to call it a day there. Thank you very much, everyone. Good luck trading this week. See you at the same time next week, and please make sure to subscribe to these videos so you don't miss the next one when it comes out.